Hello everyone. Just a minute, just so that I can follow along to be sure that everything is good. All right. So I'd like to know if you can hear me. You can see my screen. All right. So that I can kick off. Okay. Okay. I think that's good. That is good. Okay. So let's get this thing. So guys, hello. All right, I'm good. Okay, guys, let's do this. So I want to teach you lower time frame entries. See, guys, I have already taught a market structure. Okay, and when I taught market structure, I taught you the basics. Institutional order flow. The basic high, low. Coming back, into an important area, looking for the opportunity to join and keep buying pullbacks within this range. Okay, within this range you buy a pullback. Okay, I told you that was basics. Now the problem I have with the Dow theory and the basic kind of flow, when demand is holding, there are times when this thing holds very well. Okay, it holds very well. But many times, it's not clean. It's not clean like this. And I always tell myself, because I see some people, they just draw the lines. They put the lines on the chart, and it's okay to put your lines on the chart like that. But I want to see, I want to see rules. All right. What is your rule for a pullback? When do you have a valid pullback? Because some people say some people say 23%. Some people say about approximately 32%. Some people say no, 61.8. Some people say no, let it get to 76. All right. So what is the rule? What do we use? And I want to say this, rules are important because the market is random. All right, you're trading a market that is very, very random. So if you don't have a specific rule for reading your market structure, I told you in the last video that it is the most important part of everything you're going to do. Is the skeleton of the market. It is you reading the tips. Is you knowing how, the big question, should I buy? Should I sell? Should I wait? All right. For you to be able to answer those questions, you have to know the direction of the market. And that's what market structure does. It tells you where is the market going to. TA is the ability to identify trends and their turning points. All right. Identifying trends and their turning point. That's the whole thing we do with TA. All right. TA doesn't tell you, it doesn't tell you the future. You can just see the trend, and then you can say, oh yeah, there is something that says that, the trend is about to reverse. All right. That's what TA would do for you. Okay. And the purpose of TA is, for risk management. That's the purpose of TA. Risk management, entry, exit, class. right? And I tell you that this thing called TA doesn't tell you the future. It doesn't have any valid, we're just looking at the price and trying to draw lines and all that, right? What can tell you the future is FA, which is fundamental analysis, and that would take time, all right? If an economy is rising, we know Nigeria is currently in a decline, all right? But you don't know where to put the SL. You don't know where to put the TP, all right? That's the use of TA. Fundamentally, we know that the Naira is going to fall, all right? So TA doesn't tell us Naira is going to fall or rise. TA only tells us how you're going to enter, how you're going to exit. If you don't accept what I just say, you are delusional. You are delusional. If you ever think that drawing POIs or drawing lines on your chart is going to make the market buy or sell, you are delusional, all right? It doesn't. The only thing it does for us is it just gives us, something to work with, all right? And I'm clearing this early on so that you're not over attached to the result of any single trade, okay? So I'll go on from here, right? I taught you market structure, and I said, yeah, what going to make the way you have to go back to my video on market structure, guys. All right. So I said that before we can say that a swing is valid, let's say we want to say from here to somewhere, maybe up here, right? It's a valid swing. We must see something, and that is what we want to see, that the pullback is taken. We want to see a pullback. A valid pullback must be taken. If a valid pullback is taken, we call that thing inducement, and I explained all of this in the last video. All right, so this is very important. Now, when another pullback is taken up here, we can mark this high as the valid swing area. This becomes the range from which we are interested in buying. So what the analyst will say is from here to here, that's where we are buying from. So the goal of the trader now is to look for a good entry around this range. That's where POIs and inducement come into the picture. All right, I talk about inducement, I talk about engineering liquidity, and I talk about POI. All right, so I mean, this is supposed to be a short video, so I cannot go into all of those details. All right, so I'll just move on from here. So the point I'm sharing here now is you need to know, go back to that video, you see what I called a valid pullback. I explained it. I don't care. Should it be 1 bar? That's the question. Is it only 1 bar that we should say is a pullback? Is it 2 bars? Is it 3 candles? How many bars, how many candles should be the pullback? How deep should we, how deep should it go before we say that there is a valid pullback? That's the question. That's a big question. All right, and I answered it in that previous video. So do well to go back there, and I'll just show you some basic things because we need it even for the lower time frame entry. Price is fractal. Whatever is happening down there is also happening up here. All right. So on the lower time frame, see the idea. See what I teach. What I teach is if you have seen a valid swing area that you want to trade from. All right. Let's say you want to trade, okay, pullback has been taken. Now there's break of structure. So we have a swing low. All right. Now there happen to be an unmitigated order block seated here. All right. From this area. This becomes what? The inducement. Now, what do we say? We want to see what? Potential liquidity up here, lined up here. Trend line liquidity or something, right? Then the market comes all the way back to the POI. Now, let's assume that these lines I'm drawing are on the H4 time frame, okay? They are on the H4 time frame. Now, what we are saying is the market will come back after it has taken another valid pullback, which will serve as an inducement. After it takes it, it will tap into the POI. Now, what we expect is that this liquidity here should be enough. It doesn't need to come and take the liquidity at the extreme. That's what we expect. All right. Now, sometimes it will. That's why we say allow your stop to breathe. Don't be too obsessed with the risk to reward. All right. Allow the stop to breathe so that in case there's a small wick there, you don't get stopped out. All right. That being said, let's assume that we are right on this case. Okay, the market wants to tap on the demand, the POI, whatever. I call this AOV, which is the area of value. All right. If the market wants to tap here, what we expect is for the market to go back all the way up here. All right. Now, having said that, right? See, why lower time frame is important is because many times, when the market comes back to this, there will be a slight reaction. And that reaction may not get to the top. And this reaction may happen. After it happens, you know what's going to happen? It will fail. And the stop loss will be taken. So what I teach is you can go to the lower time frame and search for 1:3 or 1:5 every single time. The tiny reaction that you get as a result of the people who are going to try to buy at this demand area will give you money. If your H4 is the higher time frame, your lower time frame going to be something like M15. I already said all of this in the previous videos, right? It's going to be M15. Now, on M15, what you're going to see is that this small leg that you see here, maybe, maybe just like 3 or 4 H4 candles going up, right? It can give you 1:3. So what I want to teach you today is don't come here and come and put 1:2 because you go to your POI is on H4, right? It's on H4, and you now go to you go to M15 and look for a good order block. There's nothing wrong with that. Then you now come back to H4 to set your target here so that you are having 1:23. That's not how to trade. I have to be honest with you. That's not how to trade. Sincerely. Because on so many occasions, the market will get to 1:4, 1:5, 1:6, and reverse and take your stop loss. On so many occasions, 1:7, and take your stop loss. So what is the number? You have to do, that's why we talk about backtesting. You have to look at how much did it go in my favor? How many times? If out of 10 times, the market, you are aiming for 1:20, and the market, every time the market gives you 1:3, why won't you take it? If you're waiting for 1:20, out of these 10, maybe 1:20 may happen just once. And that once, when it happens, you are going to take partials so badly that you are not even gaining anything from the entire move. Or, the market goes in your favor and, before you know it comes back. That pullback, now you now stop out the trade or take the partials. And it will eventually get to your 1:20. But it got to that place without you. So why don't you go for something realistic? You're gonna cut it out for you every single time. That's what I teach. All right? It's simple like that. You can do it over and over and you make money continuously. All right, so I'll go on. Let me show you. See, I've actually got a couple of entry methods that I teach, but this is a short video, so I'm not going to be able to teach all the. I have about five entry models. I have the basic algo entry. I have the sweep entry model. I have the flip entry model as well. I also have the one bar order block. I have the one bar order block model. And I have, what's the other name? I've talked about sweep. I've talked about flip. I've talked about algo, and then the signal bar. All right, the signal bar. Okay, so all of them are very important. All of them, what we're saying is you already understand market structure, which I just showed you, and you have an AOV. Your AOV, what you're looking for in your AOV is to try to use any of these things to get at least 1:3. At least 1:3. That's the goal. Now, algo entry is very simple. Is I'm going to show you on the chart. So let me pick. I'll pick flip. I'll pick. Should I pick one bar? No. I pick algo. I pick sweep. Now, I'll leave out this two for time's sake. All right, and I'm doing this freely, okay? Because I always say, if I know that a lot of traders genuinely want to get better, right? And my goal is always to help, to see how we can bring the ones that we can bring out of poverty, So if you're a diligent trader, you can use some of these things, and you can start to place some trades and make a little money. You can start with these things. And then those of you who like to join in with the mentorship, you can use the information here, make some money, raise it, and then you can join the mentorship and then get the complete, information. All right, because some of these guys already paid a lot of money to join. But I believe that this is my work, and is my choice, who I decide to give it to. All right, so I'll go on. Now, see what we are saying. There is a concept I already taught you, which is a very important concept. The concept is that what you define as a pullback is if the market is coming down. Before we can say there is a pullback, I want to see the lowest candle taken, at least. I want to see at least one candle taken, and then the market continues. If this happens, then I have a pullback. Whether it's 1 bar, whether it's 2 bars, whether it's 10 bars, whether it's 20 bars, whether it's 40% pullback, whether it's 1% pullback, whatever it is, as long as liquidity has been taken on at least 1 bar, then I would call that a valid pullback. If there is an engulfing candle on 1 bar, it is a valid pullback. If the market goes, takes out, if I have 1 bar like this and all the other bars are inside, it's not a pullback, even though it looks like a pullback. Because why? These candles did not exceed. All right? That's what I call a pullback. So if I have a valid pullback, I mark it, I say this is a valid pullback. Now, when you go to the lower time frame, it is this pullback that would be your reference for your entry. You want to see them taken. Once the market takes it, it's called a change of character, meaning that there is an intention of the market to go up. What is the next thing you're going to look out for? You're going to look out for switch, order flow switch. What is order flow switch? Observe the people who are selling. Observe the people who are selling and the people who are trying to buy inside your AOV, inside your higher time frame AOV. Some people are trying to sell. They want to continue the sell. Observe to see whether their SLs have been hit. That's what we're saying. Look at them. Who tried to sell here? Somebody tried to sell. Oh, yeah, there's a little bit of reaction. He tried to sell. There's a reaction, right? But what happens? The market turns back and stops him out. All right? That's the one we call flip entry. What do? You're looking for your entry here. I'll show you in the chart. All right? So that is what I just explained is the concept. A pullback must be taken. All right? That's the first thing. So you're asking yourself, where is the pullback? Once the market taps into your AOV, immediately it taps. I usually will have an alarm. All right. So once the market taps into the alarm, I'm opening my chart. If it gets to the AOV, if it doesn't get to the AOV, I don't touch it. I don't touch it. I don't care about missed entries. All right. So my own is get to the AOV. When you get to the AOV, since that AOV is a valid order block in the higher time frame, I expect some fight to take place between the bears and the bulls. So I go to the lower time frame. I am reading the order flow. Order flow is just observing supply and demand. Which one is holding? Which one is failing? That's order flow. In this case, right? That's order flow, right? So when you get there, what you're asking yourself is, where is the last valid pullback? Where is the last valid pullback? If that pullback is taken, it tells you that the market is trying to reverse. It's showing you intentionality. Because if there's a valid pullback, it means that some people tried to sell and they thought that they succeeded. But what? We wait again and see, how is the market reacting to supply or demand? How is it reacting? Is it stopping them out? Or is holding? Are they making money? Who is making money? Is it those that are, if we're trying to buy and supply is holding and you're trying to sell, it makes no sense. You want to see those who are selling the market stopped. Once they are stopped, it tells you that the market is showing intentions of reversing. It's an early sign. And all you just have to do is to look for a valid order block. Right? Look for a valid order block that is unmitigated. Put your entry there. Look for 1:3, 1:5, max. The sweet spot is 1:4 because of commissions and spread and all of that. All right. So when I get my signal, I usually will give it some room to ensure that I'm filled. And then I put my stop loss away a little bit to ensure that I'm not stopped out unnecessarily. And then that will reduce my 1:5 to about 1:4, So, but I'm more than happy to take that. All right. So I think I should go into the chart and show you a couple of things. I'll go into the chart and show you some things. So just take note. What I taught you is the reason behind what we are doing, which for me, I believe is the most important. The reason behind what we are doing. All right. And so a friend of mine had a birthday, earlier today. So I was hoping I would have time to prepare some examples for you so that we can save time. But unfortunately, I wasn't able to do that. So I'll just show you. Take note of what I've taught you. See, what I taught you is very simple. I said that you have to look at the last valid pullback. When you observe the last valid pullback, then you look at supply and demand and see whether it's holding or is failing. When you have done that, the next thing you have to do is what? Look for an order block that is unmitigated. Another thing that is very important, which I didn't mention, is the inducement. Is very important, even if it is one bar. All right. You need to see what an inducement. All right. And when I teach, the signal bar or the sweep model. On the sweep model, what I teach is when the market gets into your AOV, let's say this is your AOV, right? Market gets into your AOV, it will bounce, right? It will bounce. Now, when it bounces, it will create a climax. This is a climax, all right? Now, I'm talking about sweep. Now, if this is a climax, the market got to this place, it stopped, it then started going back up. Now, it got back up and then it broke this area where we call now, we say, because this is a valid pullback, is it not? This is a valid pullback that led to this climax. It's a valid pullback. So we say, yes, that there is a change of character. The pullback has been taken. A valid pullback has been taken. Now, what are we looking to see? If you are talking about, take note, if you're talking about the sweep entry model, what you want to see here is the market comes back all the way back to this area. If you put a line here, you will see that what has exceeded here is only the wick of the candle. Just the candle wick. That's the only thing that exceeded. This is your order block. All right, that's your order block. So this is where you are looking to take your entry from. A sweep a sweep of what? The climax. This is the climax. When the climax is swept, once the market leaves this area and comes back, this is your order block. 1:3 here will work every single time. When I say every single time, I mean like 80%, 60%, right? It will work. It will usually work. That's very effective. That's a climax. This is an entry model. All right, when the climax is swept. Climax is the market tried to push. It couldn't go. This is the highest it got to. You know what climax means, right? It's the height, the highest area. That's a climax, right? It's the highest area. Right? Market gets there and then it returns back, breaks structure. Once the market comes back to that place again, go in, all right? So just ensure that you can see a change of character. Those are the two things I've talked. There must be a change of character. There must be a sweep of the climax. All right. And it is not textbook. That's why I'm teaching you this. All right. So I'm not going to draw a line and say, do like this, and do like this. I don't like that rubbish. All right. What's the idea behind what you are teaching? What's happening at the back? All right. Because the line you put for me, when I get to the chart, I will not know it. I won't recognize it. I will not understand it. So what exactly is happening? The one for flip entry, I think I already taught you flip entry as one of the examples in the last one. Flip entry is when that guy comes back. Let me just show you before I go into the chart, so that from the chart I just close. All right. On the flip entry, what you want to see is the market comes to the AOV. Let's assume this is our AOV from let's say 1 hour. If this is 1 hour AOV, it means that our lower time frame has to be what? 5 minutes. All right. I already told you all of this. Now, when the market taps into the AOV, what do I want to see for flip entry? For flip entry, if valid pullback, right? A valid pullback. Now the market gives you the climax. All right. After the valid pullback, you get the climax. Now, what you're going to see for flip entry is the market will return back. There will usually be what? Some sort of supply here that the market will react to. When the market reacts to it, you know what's going to happen? Market will force itself and pass through. What is happening here, guys? You're seeing what? You're seeing two things. Institutional order flow switch. How do I mean? The people who tried to sell here, that sold this thing down a little bit, they have now been stopped. SL. They have now been stopped. So there is an intentionality of price to continue upwards. There's an intentionality of price to continue upwards. All right. These guys now will take their losses. When they take their losses, in the process of taking their losses, it will force the market to go up. All right. So now what are you seeing here? What you're seeing here is very simple. This reaction becomes what we call inducement. There will usually be an order block seated here. Now, if the order block that is here has been mitigated, observe to see that the order block on this reaction is valid. And then what can you do? Come back here. If this one is mitigated, you sell from here. If it is unmitigated, allow the market to push down there and then buy from there. For 1:3, 1:4, 1:5. Right? So take note, that's flip entry. This is also referred to as demand to supply, right? It's called demand to supply or supply to demand, depending on whether you're buying or selling. All right. So what we're saying here is that the supply has turned to what? To demand. That's what we're saying. Or here, demand. Okay. That's what we're saying. All right. So this is the flip entry. This one I told you earlier is a sweep entry. The algo entry is pretty much the same thing I do with market structure, right? Where the market gives you a valid pullback, and then the valid pullback is taken. All right, valid pullback is taken. The market goes and then gives you the first change of character. Inside your AOV. Okay, inside your AOV. Let's assume that I have an AOV here. Let me just start afresh with that one. Okay, I have an AOV here, 1 hour AOV. Then I go to 5 minutes. On 5 minutes, the market comes to this area, taps it, gives us a reaction, gives us the change of the climax. All right, now what has happened here? We're waiting to ensure that we see the market change this character here. So there's a change of character here. This is algo entry, change of character. After the change of character, you're possibly going to see a break of structure again. Now, if we have an this is going to be your last inducement. We call this the engineering liquidity. All right. So you're going to have something like, an order block here, or a breaker block, or, something else will be there. All right. So that you can now say, okay, if the market crawls back to this, my order block here, on my lower time frame, I am going to what? Buy for 1:3, 1:5. That's what I teach. All right. So take notes that I'm getting 1:5 without waiting for the AOV on 1 hour to get to the BOS, which is what we call the final destination there. All right, I'm already 1:5 up, and I have closed out about 80% to 90% of my position. I've taken out about 80 to 90% of my position at 1:3, 1:4, 1:5. I will do this continuously, consistently. Then the remaining about 20%, I can allow it to run, till the end of the day. All right. Sometimes what you observe is that the market will come back and then take your break even. This 20%, you won't make any money from it. And sometimes, if this one gave you, let's say this one gave you that 4%, this extra 20% that you allowed to get to maybe 1:20 or whatever, can still give you another 3 to 4% profit. I know you will say, yes, but I could have gotten 20%. How do you know that you will get 20%? How many times have you sat through a trade and get a 20% gain? Except you are set and forget. If you are set and forget, you can do it. But you will not sleep well, knowing that you have an open position that has given you 20% profit. You won't sleep. I value my sleep. I value my sleep. If he gives me 1:5 during the peak periods of trading, if I get the 1:5, I'm more than happy to take it and then allow the other thing run. I don't care about the remaining 20%. Whatever I get from it is fine. All right. So this is exactly what I teach. You can see the models. They are very simple. This algo entry, I'll give you one bonus. The algo entry is good for continuation. Is good for continuation. See, I'm more than happy to trade. I'm usually happy to trade a continuation using algo entry on the minor structure. See what I'm saying? On the minor structure of the higher time frame. If this is H4, right? Valid structure. On H4, valid structure, inducement, order block, everything valid. Once this market comes back here and taps here and it starts to go, if there was no engagement at the AOV, I can use algo entry to take all the trades here before it gets to this place. This is the purest form of trend continuation that I have ever seen. Purest form of trend continuation. This area is called the minor structure until it breaks out. Then it becomes a major structure. Then we wait and see, okay, does it fit the criteria for a swing structure? All right. So on the minor structure of the higher time frame, this momentum push before the market goes to break structure, if you go to its lower time frame to use algo entry, all you just need is the same method. Just go back there, look for sweep. When you see this the sweep, the market pushes break structure 2 times. You come back here, take the continuation and buy 1:5. You can do it 2 or 3 times, most times on the minor structure, depending on how wide the sweep here is. The sweep is very, very wide. The number of algo continuation entries that you find will be many. If it's small, it will be lesser. All right. So let's go into the chart. Let me just show you a few examples. I hope I can touch through everything. Let's use another pair. Like I said, I did not prepare anything. I don't know which one will work very well. So we will just look at. Let me teach you first of all what I refer to as a valid pullback. See, a valid pullback is the one that sweeps at least one previous candle's high or low, and then after sweeping the previous candle's high or low, it makes a new low. All right, it sweeps the previous candle high or low and makes a new low. See, look at it here. See, we're reading all the pullbacks on this leg. From here to here, we have a pullback here. Is the pullback taken by this one? Not quite. Okay, so we have first pullback here. All right, first pullback here. Why? Because this is the high. It came back and it made a new high. Pullback. This one again, this is the highest candle. Came back, got to this low, made a new high. Okay, is this a pullback? No. Is this a pullback? No. Is this a pullback? Yes. Why? Look at this candle and this candle. All right. Look at this candle. Look at the next candle. Okay. If I put the line there, you're going to see that this one is higher. All right. This one is higher. Now, this is the highest candle. This is the low of the highest candle. The low is taken. All right. The low is taken. So what do you see? What do you know? This is a pullback. All right. This is what we're saying. This one, the market went up like this, made this high. Right, you can see that all of them are the same color, but there's a pullback there. And then the market pushed down here, swept the low, and continued to make a new high. That is a pullback. That is a valid pullback. All right. Now, if this candle in the middle that made this high, if this candle came lower than this next candle, is this a pullback? No. Why? Because this candle did not sweep the low of the candle. So it's not a pullback. This candle will now be referred to as what? As an inside bar. It's an inside bar. It's inside this one if the leg is this long. All right. So that's what we. So it now means that there is no pullback here. What we have is something like this. What we have is something like, this, which pulls back to this. And then since, nothing happened there, we now continue and say this is one straight leg, no pullbacks. All right. But the way we have it now, there's a pullback. Okay. There's a pullback because this previous low was swept. And it's just really unfortunate that I'm running into something that's a little bit technical. But I hope you get the example I'm showing you here. It's the same concept. What we're saying is, look at the highest candle. This is an uptrend. It's an uptrend we have here. So look, we're going up. As we're going up, this is the highest candle. This is the low of the highest candle. It has been taken by this bar. Regardless of this one, once we make a new high here, there is a pullback here. That's what we're saying. There's a pullback here. And I already told you an engulfing bar like this. If we have an engulfing bar, it's automatically a pullback. What does it mean to identify these pullbacks? All these areas are areas of possible inducement. That's what we are saying. They are areas of inducement. All right. So we go on like that. Okay. So that's how to know a valid pullback. So let's go all the way. So what I'm going to do here, is very simple. I will mark this thing and then we're going to see how we can use it. All right. So let me use this and say, yeah, this is the low. Now, this is the low. And why do we say it's the low? Of course, I saw it that it was the lowest area in this chart. Okay, so that's the low. And then what makes a low is when there is a sweep of the previous area and then you have a break of structure that is confirmed. I already taught that, so I'm not teaching that now. What I'm teaching now is the entry. Now, let us now assume that we are taking our entry. The pullback is taken. See what I'm saying now. Where is the first pullback that was taken? This one. Where's your entry? Where's your entry? We cannot use this. Why? Because it's mitigated. Now, but we can use this area here. This area. Okay, we can use this area because I can see this one came down, jumped up, even though it doesn't look as clean as, we would like. So what it means is that if you are trading in real time, it will be easy for you to have said, okay, let's use this one. But this is the first one that you would have paid attention to, somewhere here. That's the first one you pay attention to, somewhere here. Is it not? And say, okay, this is my, what time frame? This is H1. So if this is H1 now, you now say, okay, let me go to lower time frame here and look for an entry. That's exactly what I'm saying. Now let's go to M5 and see. All right. So on the M5, what do we have? On the M5, what do we have? See what I'm saying. See what I'm saying, guys. See what I'm saying. This is a tough one because I just use a random one. Okay. So but I'm sure you will be able to get the point here. It would have been a lot easier if I had prepared something. But I think we can try something here. I don't think I marked that POI very well because even from there's a touch even from this place. So it means that it's mitigated. Let's go back there. Beg your pardon. Let's go back there and see. Yeah, I obviously did not mark this very well. Okay, so I think what would be ideal to use in this case would be something here. All right, something here so that we can do the right thing already. All right, so we have a week here. All right, this is a type of demand in this case. Let's go to 5 minutes again and then look at it. Okay, so hopefully I will get like 2 or 3 more examples that will clear the air. Now, why I'm showing you this is because this thing failed. You can see it didn't get to this area, but I want to show you that it's still possible for you to take 1:3 somewhere around here. Just read the order flow switch and hopefully you will see where you could have gotten an entry and then taking the trade. Yes, the market will turn and hit your SL. If you were waiting for the full TP here, you will not get it. If you were waiting for the market to get here, you would have failed on this trade. But look at why the lower time frame engagement is important. If you come here now from the area where the market is tapping into that week, all right, which we're trying to look for something that was not mitigated. Unfortunately, there's a lot of noise here. This is Euro GBP, and I think the pair is not even the best to use as an example right now. But that's where we find ourselves. So let me show you what I'm saying here, guys. Okay. So where is the first pullback? You see the way I ask myself that question. Where is the first pullback? Where is the first pullback? All right. First, where is the first time the market taps into the POI? All right, this is the first time. Now, where is the first valid pullback? This is the first valid pullback. Look at it. This one. You can see this is the lowest candle. This is the high of the lowest candle. It was taken. Market continued down. So this is the first valid pullback. This is the area where the market have to mitigate first. So we want to see the market take away this pullback so that anybody who is trying to sell here would have been stopped, So that's the example we have right here, actually. So what do we say from here? All right, first pullback is taken. Now, what are we looking for? What are we looking for? We're looking for either a sweep entry model. Or we're looking for a flip entry model, or we're looking for an algo entry. Those are the things we are looking for. Now, let's continue to read this thing. So you can see, after the first touch, unfortunately, we do not have, another touch that is deeper so that we can now say, oh yeah, there is a climax. Okay. So, but what do we have? We need to now say, okay, where is the inducement? Where is the inducement? Now, after the change of character, which is here, guys, after the change of character, which is here, what did you see? Market pulls back, makes a new high. See it here. We have this as the first valid pullback. Is it not? That is the first valid pullback. I hope you're with me, guys. That is the first valid pullback here. This is a pullback. Because this, I mean, if you look at the high here, this one exceeds it. All right, this exceeds it. So you can see that this is as good as, the market pushes, changes the character. This one is change of character. This one is a pullback. Now, after the inducement, what are we looking for? We are looking for an unmitigated order block. That's what we're looking for. All right, that's exactly what we're looking for. Now, where's the unmitigated order block? The one that has, that owns the gap. Which one owns the gap? See it. This one. This one here. This bar here. That's it. That is it. I hope you understand. Now you could have simply taken your entry here for 1:3. Some people now, obviously, the guys who learn from me understand that you can refine this, to this area where you have the highest volume, the body, so that your stop loss will be reduced. Now, if you can do this, you can get 1:5 here, right here. Look at from here to here and here. This is already 1:8. I'll be 1:8 or thereabout. All right. So you can very easily, I'll have to be honest with you. You can very easily get these things. You don't need to be right. Now, the other question that comes begging is, what time of day is this thing happening? Is it in Asian session? Is it in London session? What time? That's another thing you need to consider. If you missed this first one now is the basic entry based on order flow switch. Basic. If you miss this one, how would you have entered? If you miss this one, how would you have entered? You can still enter here again using, when you wait here, right? See, I don't have a clean sweep here. But this could have as well. If let's say this is the lowest level, and then this one sweeps it cleanly, because I don't want anything to close. Some people will say, yeah, this one closes and then the next one sweeps. Yeah, some people can say that, but I like to see the sweep. Don't go there and close. So if we have a sweep here, what we could have done is this becomes the order block. This one becomes the order block. This one becomes the order block. All right. You can see that this is pure. I don't have any knowledge about this pair or whatever. I just open the chart and do it randomly, and you can see how we could have taken. Oh my God! I just saw that this area is covered. You see how we could have taken the entries. So if we had a sweep here, all right. If we had a sweep here, what we could have simply done is to take this particular one from here, and then stop loss below this area, and then target 1:3, 1:4, 1:5, and then again you could have you see that's how you could have entered if you missed the first one. All right, again, how could you have entered? Again, you could have entered. This is not the best example, but there is a flip entry model here. Where is the flip entry model? See, this area served as a supply. There's a supply here. The supply guys, see them. They look at this and then they say, yes, there's a supply. What happens? This is a reaction. All right. What do you see? The market pushes, tries to break it. It cannot break because people are shorting the supply there. People are shorting the supply. And then what happens? You see that the market, there's a reaction. There's a reaction here. And then the market goes up, changes character. So what do you do after this happens? What do? You look for an unmitigated order block and then you trade. Look for unmitigated order block and then you trade. All right, so your entry would have been, let's say, from somewhere here. Right, you could have taken this entry. This is inducement. You use this as the extreme candle here, which will serve as the demand in this case. And then you can buy here. And then usually algo entries targets will get you to at least sorry, this is not algo. So this is the flip entry model. So you can just very easily say from here you have 1 is to how many? This is 2.6. 2.6, we can have, let's say, 1 is to 3, 4, or 5. All right, but for trade management, as soon as there's a break of structure here, as soon as there's a break of structure, you have to actually break even on the trade. All right, so but what I usually would like to do is after I take my 1 is to 3 or 4 or 5, there's a break of structure most times, then I will just move my stop loss to the entry so that I know that I'm not taking any SL on that trade anymore. And then you now wait, you see what happens. The market didn't get there, it didn't get there, and then it came back and stopped you. All right, so let me look for another pair and another example. This candle is, the candles here are really, really noisy, and that's why you don't just pick any candle or any currency pair randomly. You have to use the ones that most likely align with what you do. All right, you want to see something that is a little bit clean. Something, I don't know which one to use here now. So let me see card pairs. Let's use card. I'm hoping, or AUD USD. Let's try. I'm hoping we can get something that we can work with. Let's go to H4. Seems I've used this as an example before. Okay, so let's just look for a valid POI. All right, because the class today is not about market structure. All right, so let me look for a valid POI. I won't go backwards too much. So I have, obviously, I'm seeing that there's a sweep here. There's a sweep. And then since there's a sweep here, this serves as a signal bar. All right, that's a signal bar. You can buy. You can buy. That's a signal bar. All right, I already told you I will not tell you, but that's it right there. All right, so you can buy from there and go up. Okay. So here I think we can use this is not clean enough for me, man. It's not clean enough. Let me see if we have another time frame that might work better. Not quite. Okay, let me just look for something that we can manage. I want to see something that actually worked. Let me see EU. Okay, I think I used this as an example very recently. So let's look for any valid order block here. Clear all the drawings here. Okay. Let's look for valid order blocks. All right, where the market bounced from, and then we'll go to the lower time frame and see how how we could have. Let me use H4 because I've already used H1 so that you can see that this thing's working on all the time frames. Do we have an entry here? Do we have here? We do have here. Okay, let me just show you with that one for time's sake, because I have to close the class really soon. Now from this area, look at what we have. Let's go to M15 and see how we could have gotten in. Okay, so sometimes you will not get the entry. All right, so take note of that. Sometimes you will not get the entry. All right, sometimes you will not get the entry right here. So that is where you can now say, okay, how can I use algo entry? Unfortunately, we don't have enough information here, but you could have used algo continuation entry here, or you could have simply just you could have used algo continuation entry. All right, so all you just want to see is unmitigated. This is unmitigated, right? You can see it's unmitigated. You have this break of structure, you have another break of structure. Market pull back to this area of supply here. You can see if you had sold from here, you would have been able to get your profit down there. Okay, that is, by the way, let me look for something, please. I really want to show you something that looks clean. All right, or better still, for because of time, let me show you some of the examples that I have taken. Okay, so these are some of the trades that I take. So what you see here is, I believe this is an AOV. You can see this is an AOV. This is the first time the market enters the AOV. All right. What do you see? What did I do here? It's very simple. See, market comes back. See, first things first. When was the pullback taken? See the pullback here. You see this one from here to here. That's the last pullback. You see, that's the lowest. All these ones are not pullback. This is the pullback from the leg that entered the AOV. I've scattered it. Okay, yeah, I still have it here. Right? From the leg that entered the AOV. See the leg that entered the AOV. No, this is another one. Back or front. They are all the same. It's just the same thing I taught you now. That's what I use every time. You see, market pulls back, enters there. Once it enters here, you see the pullback here. This guy. See, it's taking. Immediately it's taking. The market comes back. It prints what? Inducement. Prints inducement. All right. It prints an inducement. Immediately you get the inducement. What do you look for? Unmitigated order blocks. Right here. And you can see I have my entry here. I have my SL. I usually put my SL at the extreme. All right. I usually put my SL at the extreme. Okay. Then we're looking for what? 1 is to, let's say, 3, 4, and 5. And you bet I would have taken about 80% off at 1 is to, once I get to 1 is to 3 area, I'm looking at the market closely to just take out 80%. All right, that's exactly what I'm doing. Okay, so let's take another example. Let me go this way. So I have, like, you can see them. See, I'm not looking at, I know that the market may get to this area, but from here to here, 1 is to 3, 4, 5. If you reach 1%, this thing happens every time, I swear. I just said I swear. This thing happens all the time. Honestly. Right? It happens every single time. Every single time. Honestly, look at this one. Okay, no, not sweep. But what is happening here? Why am I selling here? Let's see. Tap. Change of character. No, okay. I think this is the higher time frame. This has to be the higher time frame of the one I just showed you. I think it has to be the higher time frame of the one I just showed you, because there's no way. I think it's the higher time frame, because this looks to me like I'm using the weak area. Okay, so it's the same thing, guys. It's the same thing I'm doing over and over. All right, it's the same thing. Look at this. It's the same thing. What do you see? When is the first pullback taken? That's the first thing. The first thing is, this is the lowest. This last line is the AOV. When was the first pullback taken? See, this is the last time pullback is taken. Is it not? Pullback is taken. Two things. You can say this one took this pullback. This one took this pullback. This one swept. And then this becomes your order block. You can enter from there. All right, you can enter from there. See, this is a sweep here. Once you have a sweep, this becomes your single candle order block. You can enter. All right, and then buy from there. All right, if you miss that one, how would you have entered? Hopefully, you would have gotten, I think, you would have gotten, I'm looking for something. There's no inducement here. I like to see inducement before I take the trade. I always like to see inducement. All right, what do we have here? Flip entry. Flip entry. That's what we have here. Okay, market gets to this point. There are even two. See, here we have the sweep entry model. Sweep entry. Look at the high here. right? This is the lower time frame. Market, this is the climax. Market pushes, comes back, pushes up, right? Climax is swept. The climax is swept. If you miss this one, this single bar here that sweeps serves as the other block. The moment the market pushes down and comes back to it, it will tap. Look at this wick here. That wick would have tapped you into the trade. This one, it will tap you into the trade, and then it will take you down. All right. So the important thing is, I think why I didn't take this particular trade is because there is no change of character yet. So you need to ensure that there is a change of character. That's why I didn't take this particular one. But I'm telling you as an example, if this guy had gone low all the way to, I think here, right, where it changes the character, then you can take this one as your what? As your sweep entry model. Okay, so but what happens? This is what? This is demand. Is it not? This is demand. This serves as demand. This area. If you don't like this one, of course, this is reacting to this demand level here. You see it is reacting. Market pushes up, makes a new high. I'm not happy about that because I don't want them to make money. I want them to be stopped. So I will wait. See, I'm just reading it, right? I will wait, and then wait for what? There's a weak area here where the market is reacting from. Hidden supply, if you like, or demand in this case, right? This is the reaction. These people are they put their limit order and the market is buying. They think that they are going to make money. What happens? They get stopped. Immediately they get stopped. I need to see inducement before I use this bar. You can see I use that bar, right? Before I use this unmitigated one here, I need to see what? Inducement. What is inducement? A valid pullback. Where is it? See this low. It was taken here. Immediately the low is taken, pushes to the new low. This becomes my inducement. This becomes my entry. And then what? Stop loss here. All right, for 1:3, 1:4, 1:5. It will work. Why I'm saying this is because I want you to go and back test so that you see where exactly you put your target, where you put your stop loss and all those things. You will see them. When you take multiple examples, you will see them. All right, you see all of them. Okay, so you can see I'm taking these trades and I'm showing you that's all. By the time the market comes back all the way to this area, I have about 1:45. Then I will take my profit there. I take 1:4, 80% off. I've made about, if I usually would take 0.5% most times, so I would have gotten like 2%, 2.5% on the trade. Flip entry model. Now, if there was no inducement here, assuming I did not see any inducement here, what would I have done? I would have come up here. I would have come up here to look for an I would have looked for an order block, basically. All right. What I mean is I would just look for something that is valid, at least that meets. I usually have 5 criteria for me to say that an order block is valid. So if I can see at least 2 or 3, I will use that particular bar as a reference. Like this one now that swept this high, I will say, okay, yeah, I like liquidity a lot, right? Because I feel that's what moves the market. That's where the strength is. This one went, they got stopped out, the market pushed down. So this is a valid place. All right, so I can now say, okay, let's use this area here as the entry if there was no inducement here. So I will now say, okay, this reaction becomes my inducement. Then I will use this place for my entry. And then I'm targeting somewhere here for 1, 2, 3, 4, or 5. All right, so I believe this is the same trade. You can see that that's exactly what I did here. This is the order block. And then look at the trade again. That's it, right? Other block, entry here. Yeah, I remember, I think I kept some examples on my Telegram saying I was going to make reference to them. You can see I've broken even on this trade. Right? I broke even. And when did I break even? When I got 1:5. Break of structure, 1:5, I have broken even. I'm done with this one. All right? So that's basically how you can enter the trade. Read it, observe it. Is there a sweep? Has the pullback been taken? Is there a sweep? If pullback is taking, change of character. If pullback is not taking, wait. If pullback is taking, by you're getting a flip entry model, look at it. Is there an inducement? Is there another pullback here that is taking? If there is, yes, then inducement is available for this push to work. Where is it going to tap into? Your unmitigated order block. All right, so I'm going to stop here. Because time is already fast spent. All right, you can see that's the same thing I'm doing over and over and over, right? Over and over. Where is the first pullback taking? See the first time pullback was taken is here. Here, there's a pullback here. That's the first time it was taken. He gave this reaction. See the reaction. This is a reaction. Now, there's a break. Anybody who is buying from this area is stopped. There's a break. What do? I'm going to buy what? The unmitigated order block. If you don't like this one, wait. This becomes what? Your inducement. You can now use this bar, to get in here. All right, that's exactly how you can trade. It's easy like that. If you're not happy with that, you can wait. If you missed all these ones, in fact, from here to here, 1:5 will be filled. If you miss all these ones, you would have still gotten in here. How? Algo entry. Okay, we assume that there's a sweep here, and then this is the last inducement. The moment the market comes and takes this inducement, taps into anything here, between here and here, you can sell from here down. All right, so what are we looking for? Change of character, break of structure, come back and mitigate and take the inducement, the last inducement, and then that should work. All right, so let me call it a day. Here. Thank you so much, guys, for taking the time to be here with me. All right, so go ahead and do your back test. When you're back testing, first go through my market structure video and learn how to mark market structure correctly. When you learn how to mark the market structure correctly, learn how to spot the other blocks as well. You can see I have something here. If you go to the lower time frame, you can join all these areas here. They are continuation models that I teach. There's a lot of continuation that you could have used to get in on this trade. A lot. All right, a lot. And then right here, look at it. Observe this area. Say, how could I have gotten in on that area? How could I have gotten in? It's simple like that. How could I have gotten in on that area? Which at what point did the order flow? So back test it and then forward test as well. How could I have gotten in here? Right? How could I have gotten in here? Climax, guys. Climax, see it. When was the first pullback taken? This is the last pullback here. Market taps into the POI. This is the last pullback, this area here. When was it taken? Here. The market took it out. Now, after the market takes it out, what did the market do? The market came back and swept. Market came back. This is H1. That was GBP daily, right? This is H1. Market comes back and sweeps this area. This is what? The sweep entry model. Market sweeps this area. What do? This is my entry, the whole of this area. I always like to refine to the week. When I have sweep entry models. I refine to the week as my entry. So the whole of this place is my entry. Once the market takes off from here, it will come back to mitigate it. Once it mitigates it, it will serve you 1:3 minimum. All right, that's how to trade. There are a lot of things that I still need to teach you, which will be of help to you. Hopefully, in the future, I'll still teach these things. But in the meantime, you can use this to make money. I bet you. If you're a serious-minded person, the information I give you here are very, 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 very valid information that you can use. Go back to the chart. Use them, make money, and then come in, join the other guys. And then see how you can, grow your trading career. Thank you so much for tuning in, guys. It's always a pleasure to help as much as I can. All right. And I hope that you do not take these things for granted. Go back and study. There is a right way to trade. All right. And my people perish for lack of knowledge. All right. So if you do not know if you do not know the right information, you're not gonna, you're just gonna be all over the place and you never make money. All right, so I'll stop here, guys. Thank you for joining me. Until next time, do have a wonderful day, week, month, and all of that. All right, cheers, guys. And then please let me get your feedback. Also, if you're not following, is it following or subscribed? If you're not subscribed to the YouTube, please go ahead and do that. All right, so subscribe, because I'm working on, you can see I don't have anything prepared. I'm just, all over the place, right? So I'm working on putting something together for you guys, right? Something structured that I'm going to use with the presentation, right? So going forward, that's what I'm going to be doing. So so until that time, right, take care of yourself, guys. All right, so subscribe, like it, make comments, let us hear, right? Do all those things, because if you do it, the algo will now push good information to other guys. All right, teach them the right way to trade. Many of our brothers, they need the information. Thank you so much, guys, for tuning in. God bless you. Do have a lovely week ahead, and may the peeps go with you.